Hello and welcome to Bunnex Investment Group. Today we are going to talk about how to use at least 3 time frames to get those sniper entries you always wanted. The war tip will also be shown, so make sure you watch till the end. But before we jump into the war video, be sure to check out our free signals Telegram channel. The link is right in the description below. If you are new to this channel, hit that subscribe button and smash the notification bell icon. So we'll first define what a time frame is. Basically, a time frame is a way of grouping prices to display them on the charts in a more convenient manner. There are numerous types of time frames, but the following ones are the most common through different platforms. And these are the M15 timeframe, the 1 hour or H1 timeframe, and the daily timeframe. So you are probably asking yourself which best time frame to use. Although there are lots of time frames available for us to use, there are some that will simplify our trading. And these are the daily time frame, the H1 time frame, and the M15 time frame. But each of these has their own uses in helping us determine those perfect entries. I'll go through each and every time frame and tell you what its uses are. The daily time frame. I'll explain further first before we go on the charts so that you have a clear picture of what we are talking about. The daily time frame is the most easiest time frame to give and point us the high liquidity zones of the market. So high liquidity zones are those points where price rejected in history or where price reacted in history on the same region. Let's take for instance, price was going up and it went down. It returned and retested the first point of rejection and went down. It also came back to that point of rejection and went down. This is what I am calling history. In the future, we anticipate that price will come back to that point and reacts again. So this band becomes a high liquidity zone. It is a point where the market makers introduce funds or where a lot of traders exit or enters trades. So taking trades in these regions gives you a higher statistical probability in your trading. Therefore, in using multiple timeframes, you will need to go on the daily timeframe first and mark up all the high liquidity zones. The H1 timeframe is used to count levels and find where you are in the market cycle. Levels will be counted to or away high liquidity zones. So in using the multiple time frame trading, you go to the H1 after the daily time frame. Last but not the least is the M15 time frame, and it is the microstructure analysis of the market. After H1, we go to the M15 time frame, and after 2 levels of H1 drop or rise, we will need to observe the level 3 using the M15 time frame. I'll repeat this again. After 2 levels of H1 drop or rise, we will need to observe the level 3 using the M15 time frame. So basically the sole objective will be to see 3 segments of the level 3 before we hit a reversal trend. To understand this clearly, we will need to have chart examples, and that is what we are now going to do now. So this is euro against dollar, EU in short. So the first step that I've said is to go on the daily time frame to look for history of the market. To see clearly, we need to zoom in so that we can see the bigger picture of the market. As you can see on our left side, we had a point where market consolidated heavily, and this is the point we are most interested in the future. As you can see, marking this point, we can see that in the future, price reacted again. So we are now looking for, this is now our overbound or our top bound, where we are now counting levels from, or where we are now counting levels away. Then we have to the destination or the next high liquidity zone. We had the first point of touch and the second point of touch, making that this gives us a picture of where we are going and where we are coming from. Now, the next thing after marking out these high liquidity zones, we now go to the H1 time frame. On the H1 time frame, marking levels from this high liquidity zone to this one will give us a picture of how many steps are we left from reaching this and reversing. So I'll use rectangles to mark levels. As we can see on this point of rejection, which is our daily highly liquidity zone, we had the first drop here. After that drop, we had a consolidation phase. This was a small consolidation phase, and this gave us level 2 drop. This is level 2 drop and a consolidation phase again. After that, we had the third. We are now looking for the third level drop, but that is where I've said the next step is to switch to M15 time frame when you are now on level 3 of the H1. Why do we do so? Because we want to see the exact point of reversal, and that can only be seen if we are counting these segments like 1, 2, and the point of reversal, which is this point. So this is what we need to see on this level 3, and the candle closure above the 13 on this level 3 will give us the most sniper entry. So in this scenario, we have the first drop, but we are now in consolidation. As you can see, we are now in consolidation, and we are now waiting for 2 more drops of price, the first one and the second one, to give us the ultimate point of reversal. Basically, that is what you'll be doing with these time frames. The first thing is to go on the daily time frame, mark out all the high liquidity zones, then go to the H1 time frame and mark out all the levels. And then when you are now in level 2, switch to level to M15 time frame. Then on that M15 time frame, you have to see 3 segments of the market before going long or short, depending on your direction or bias. So basically, that is what you'll be doing, and following this will give you a statistical edge, or increase your odds of success within your trading. It doesn't mean that using this system will give you 100% win rate, because nothing like that exists under the sun. So we fight for a higher statistical probability in Forex. As I always say, discipline and consistency are the most fundamental properties of a profitable trader. Without discipline, you will never be consistent. And without consistency, you will never achieve the goal. So do a lot of meditation and stick to the only trades we have discussed. And do not give yourself pressure, as it is very easy to succumb to this due to social media. In conclusion, follow your plan without deviation, distracting thoughts, or hesitation to act. On that note, thank you for watching. Like and subscribe and check out our free signals Telegram channel. This is the link in red.